Hi, I'm Lisa Reidsema with Craft Your Practice, and we are at episode 13, insurance decisions. So, in network, out of network, or private pay. The insurance question is one of the first big decisions that you make in private practice. And almost nobody makes it not because they are careless, but because they're making it based on incomplete information and a lot of feelings. So, some therapists avoid insurance entirely because they heard reimbursement rates are low and paneling is a nightmare. Some therapists panel with every insurer they can because they are really worried about filling their caseload and want to cast the widest net possible. So most are somewhere in the middle, vaguely anxious, not quite sure which direction is right. What I want to do today is give you a framework for making this decision based on your actual situation, your market, your goals, your financial reality, your clinical population. Because the right answer for you is not the same as the right answer for the therapist in the Facebook group who told you to go private pay, or the one who told you insurance is the only way to build a sustainable practice. This decision has real financial consequences. So let's make it with real information. Part one, understanding the three options. So let me define the terms first because they get conflated in ways that create confusion. So, in network means you have a contract with one or more insurance companies. Clients use their insurance benefits to pay for sessions. The insurance company pays you a contracted rate, which varies by insurer, by your state, and by your license level. And the client pays whatever their copay or deductible requires. In exchange for that contract, you agree to see the clients on their panel at that rate and to comply with their documentation and billing requirements. So, out of network means you don't have a contract with the insurance company, but you accept clients who have out of network benefits. You charge your full fee, the client pays you directly, and then they submit a super bill, a detailed receipt basically that you provide to their insurance for partial reimbursement. How much they get back depends entirely on their specific plan. Private pay. Private pay means that you do not work with insurance at all and you charge your fee, clients pay directly, and insurance is not in the picture. So some private pay practices offer sliding scale fees, some do not. And these are three genuinely different business models, not just three payment options. So they affect your income, your caseload, your documentation requirements, and your administrative burden, and the population of clients who can access your services. Choosing between them is not a minor administrative decision. Part two, the real math. So, before you decide anything, you need to know the numbers. And I mean your specific numbers, not the averages floating around in therapist Facebook groups. In network reimbursement rates vary dramatically by insurer, by state, by license level, and by service code. A licensed professional counselor billing a 45-minute individual session might get $80 from one insurer and $130 from another in the same state. So find out actual contracted rates for the panels that you are considering before you sign anything. You can ask other therapists in your area, call the credentialing departments directly or check with your state association. Here is the math that you need to do. Take your target annual income, divide it by the number of clinical hours you are willing to work per week and the number of weeks that you plan to work. That gives you your required hourly rate. If in network reimbursement in your area is below that rate, in network alone will not get you where you need to be without working more hours than probably is sustainable. So, out of network works when your clients have robust out of network benefits. And this is more common in markets with higher household incomes and employer sponsored plans. It's less common in markets where most clients have Medicaid, marketplace plans, or minimal out of network benefits. So, know your market before you assume this model is viable. Private pay requires a client pool with the financial means and willingness to pay your full fee or rate. And it also requires you to have the marketing and referral infrastructure to fill your caseload without relying on the insurer directories. That infrastructure takes time to build. None of these models is inherently superior. Each of them can work, but what does not work is choosing one based on ideology rather than your actual financial situation. So, part three, what nobody tells you about each model. Let me tell you the things that people leave out when they advocate hard for one approach. What they leave out about it in network is the administrative burden is real. Prior authorization, claim denials, appeals, and EOBs that do not match what you expected take time. And if you're a solo practitioner without a biller, that time comes out of your clinical work or your personal life. So budget for it. Reimbursement rates can be negotiable. And in some cases, particularly after you have been in network for a while and can demonstrate your utilization. It's not automatic, but it is possible. So being in network does not guarantee a full caseload. Insurance directories are often outdated and clients still have to call and connect. And paneling is a referral source, not a marketing strategy on its own. So, what they leave out about out of network super billing is a service that you provide, not a guarantee of reimbursement. So, if your clients have high deductibles or minimal out of network benefits, they are paying your full fee out of pocket, regardless of what you put on the super bill. So, make sure that they understand this before they start treatment. Out of network can create a mid treatment financial crisis for clients if they did not fully understand their benefits upfront. A client who thought they would get 70% back and is actually getting 40% may not be able to continue. Have this conversation before the first session. What they leave out about private pay. Sliding scale is not a simple solution to access concerns. An informal sliding scale without clear criteria creates resentment and inconsistency. And if you offer it, build structure around it, what your lowest fee is, what documentation or criteria you use to offer it, and how many sliding scale spots that you maintain at any given time. So private pay does not mean you never deal with insurance. You still need to provide information about benefits, explain your fee structure, and potentially provide super bills. So you're not just billing directly. So part four, how to actually make the decision. Here's how to think through this for your actual situation. Start with your financial floor. What do you need to earn to cover your expenses, personal and business with a reasonable margin. That number drives everything. So if the in-network rates in your area can't get you that number, a sustainable caseload size in network alone is not a viable primary model. Know your market. What does your client population look like? What insurers are most of them on, and what are the out-of-network benefits, like in your area? What is the going private pay rate for a therapist at your experience level? You need local information, not national averages. So consider a hybrid. Many therapists panel with one or two insurers, and often the ones with the best rates and the most straightforward billing, and hold the rest of their caseload for private pay or out of network clients. This is not a compromise. It's a deliberate strategy that gives you some referral volume through directories while at the same time protecting your rate and limiting administrative complexity. So build in a review point. Whatever you decide, commit to evaluating it at 6 months and 12 months. Is your caseload filling? Is your income meeting your floor? Is the administrative burden manageable? And the right decision at the start of your practice may not be the right decision 2 years in. So build flexibility into how you think about this. The decision is not permanent. Paneling with an insurer and later leaving their panel is possible, though it requires attention to your contracts and your clients who are mid treatment. So going from private pay to in network later is also possible. This decision can be revised. Make the best one you can with the information that you have now and plan to revisit it. So the insurance decision is a business decision and a clinical decision at the same time. It affects who can access your services, what your income looks like, how much administrative work you carry, and how you structure your practice. Make it with real numbers, real market information, and a clear sense of your own financial floor, not with someone else's ideology about what therapists should or should not do with insurance. If you are in the early stages of building your practice and want a structured framework for working through this decision along with the rest of the foundational decisions that shape the first 90 days of private practice, that's inside my course, The Launch Lab. And the link is in the description. If you're specifically working through the credentialing process and want to move through it in sequence with support, the Credentialing Accelerator is another course that I have, and it's self-paced and available now, also in the description. And you might want to grab my book, Credentialing, Insurance, and Getting Paid. And next week, we're going to be talking about referrals, where they actually come from, and how to build the kind of referral network that fills a practice over time, not just occasionally. Subscribe so you don't miss